Trump's push against Powell adds to doubts of U.S.'s haven status. The BBC says U.S. stocks and dollar slide after Trump attacks Fed Chair Jerome Powell. The Guardian, U.S. stock markets fall again as Trump calls Fed Chair a major loser. Bloomberg, Reuters, they're all reporting the same, and U.S. stocks nosedive as Trump harangues Powell. Trump's threat to fire Powell is a big problem for markets.
These threats of firing Jay Powell are really concerning to investors for a number of reasons. One of the things is you already have real big policy uncertainty from tariffs, and tariffs are really an undoing of the world order, where the U.S. had massive trade deficits and massive inflows of capital. So tariffs already are sort of throwing everybody for a loop. And then threats of firing Jay Powell is another massive change. As a potential foreign investor in U.S. bonds, you're looking for the safety and security of the U.S. dollar. If politics starts getting into monetary policy, you now, as a foreign investor, even a U.S. domestic investor, can't necessarily trust that your interest as a bondholder will be respected. And so that's a potential risk for the dollar and a potential risk for interest rates. All of this feeds into fears within the stock market as well, because everything levers off of the U.S. Treasury. You're seeing rates tick up here, even with a risk-off market. So this is a really big problem. Hopefully it's just noise. I think most investors are assuming, Jay Powell will fill out his term, but it's clearly upping the potential risk for investors in U.S. assets, both stocks and bonds.
Let's dive into the comments here. What happened to Drill Baby Drill? On day one, BS Bud, his mouth overloaded his ass again with the reply below reading, gas prices are lower all over the country. If you drove a gas car, you would know that, but I guess pedaling your bike is all you can afford. Ouch, burn.
All right, James Fishbach is the CEO of the investment firm Azoria, and James joins me now. First off, can Trump fire the Fed chair?
The U.S. dollar is experiencing a decline, reaching its lowest level since January of 2024. This, as reported by the Bloomberg Dollar Index, down 0.7%. This follows President Trump's threats to remove Federal Reserve Chair Jerome Powell, raising concerns about the Fed's independence and the dollar's credibility. Investors are also reacting to ongoing trade talks, with China opposing deals that harm its interests amid fears of escalating tariffs. The dollar's weakness is evident against major currencies, and the euro is up 1% at 1.15, and the yen is 11% stronger year to date, contributing to a 1.2% drop in Japan's Nikkei index. Gold prices hit a record high of $3,385, driven by dollar weakness and geopolitical uncertainties. Market sentiment is risk off, with S&P and NASDAQ futures down 0.8%. Analysts warn that undermining the Fed could destabilize the U.S. economy, potentially eroding confidence in U.S. exceptionalism and prompting capital flight, with investors diversifying into markets like China, India, and Europe.
Well, if you ask the founders of this country, the question would be absolutely right. He can fire the Secretary of Defense, the Secretary of Treasury. He should absolutely be allowed to fire the Fed chair if the Fed chair is not doing a good job. Stuart, here's the truth. Last year, Gallup did a survey, and they found that only 4% of Americans had a great deal of confidence in Jerome Powell to do the right thing for the economy. If this guy ran for office, he'd be thrown out overnight. The truth of the matter is that Jerome Powell has done an awful job. He was too late to respond to the rising prices in 2021 and 2022. We had 9% inflation. He bears the burden, and President Trump is right to call him out for it.
Did Jerome Powell lower rates right before the election? Was that to help the Democrats? Was he political?
It looks like it was awfully political. And the truth of the matter is there weren't the economic fundamentals to support lowering rates right before the election. If there were, they wouldn't have changed their tune the second President Trump won and said, wait, never mind, we don't want to do that anymore. Remember, this is the same Federal Reserve that Jerome Powell's deputy, Bill Dudley of the New York Fed, said in 2019 that the Fed should consider the way its monetary policy could affect the election outcome in 2020. If that's what they're saying publicly, Stuart, imagine what they're contemplating behind the scenes.
And this one is actually pretty hilarious. So Jerome Powell wants me to believe that tariffs that are bringing money in are more inflationary than when our government printed trillions. Sure, Jan. But as we check the market, XRP is holding flat at just above $2, and Tesla is on the decline, down almost 12% over the past 5 days. And I'm just going to hold tight. I'm going to ride this one out and see where it takes us. I'll fill you guys in on my Robinhood portfolio later. Trump renews attack against Fed chair as markets continue to fall. BBC News, U.S. stocks and dollar plunge as Trump attacks Fed Chair Powell.
The president deserves to have people that represent his economic vision for the country. That's Scott Bessent, that's Howard Lutnick, and if Jerome Powell is going to obfuscate, is going to be recalcitrant and frustrate President Trump's agenda, he should be terminated.
I understand your opinion. He should be terminated. He should be fired. But if you did that, what impact do you think it would have on the stock market? I mean, that would unsettle the market, wouldn't it?
I think it absolutely would. To tell you the truth, I'm an investor, so I think that the stock market would probably panic and overreact in the moment. But the founders of our country did not envision a world where Jerome Powell can screw up so badly as he has done over the past couple of years and still keep his job. If the president of the United States cannot hold executive officers accountable for doing a bad job, then Stuart, guess what? They're going to keep doing a bad job. And so Jerome Powell is not above reproach. He should be held accountable, and if the president of the United States wants to terminate him and put a more qualified person in that position, the Constitution says he has a right to do that.
Okay, I should have billed you as a Fed critic, a Powell critic, and you are. Thanks very much for joining us, James Fishbach. We'll have you back again soon. That's a promise. Thank you very much. Yesterday,
Thanks, Stuart.
Trump held
Hey, everybody. Thanks for coming back. Thanks for tuning in. And I got a great question from one of the comments, and it was, what happened to Trump and day one, drill, baby, drill? And yeah, with gas prices dropping steadily over the last 100 days, what's the deal? Well, let's break it down. On day one of President Trump's second term, January 20, 2025, we all know President Trump didn't waste time. He declared a national energy emergency and signed executive orders to push his drill, baby, drill agenda. This included rolling back Biden-era regulations, speeding up drilling permits, opening more federal lands for oil and gas, and even eyeing projects like a massive natural gas pipeline in Alaska. The goal? Boost U.S. oil and gas production to lower energy costs and fight inflation. Trump's been vocal about this, saying America's sitting on liquid gold and promising to cut energy bills in half within a year. Now let's talk gas prices. Since Trump took office, the national average for a gallon of regular gas has dipped to about $3.08, down roughly 2% since January and nearly 10% from a year ago. Sounds great, right? Trump's team, like senior counselor Peter Navarro, has been quick to credit Drill Baby Drill for this drop. But here's where it gets interesting. Experts are saying Trump's policies aren't the main reason gas prices are falling. Shocker. The U.S. was already the world's top oil producer under Biden, pumping out a record 13.5 million barrels a day in 2025, and that's only expected to creep up slightly. The real driver behind lower prices, though, a global supply and demand imbalance. There's a ton of oil out there, and demand's been softening, especially in places like China. Plus, OPEC's been holding back production, which keeps prices from tanking too fast. And here's the catch, though. Trump's other policies, like tariffs, are throwing a wrench in the works. Tariffs on steel and imports are jacking up drilling costs. Think 10 to 20% more for new wells. And with oil prices dipping to around $60 a barrel recently, some oil companies are hitting pause on new projects because they're not profitable. And so while Trump's chanting drill, baby, drill, the industry's like, hold up, wait a minute. We need higher prices to make this worth it. It's kind of ironic though, right? I mean, since low gas prices are great for consumers, but tough on drillers. So what's the takeaway here? Trump's day one push for drilling is in full swing, but it's not a magic wand for gas prices. The drop we are seeing now is more about global market vibes and his policies kicking in, to be honest. And with tariffs hiking, costs and oil companies playing it safe, don't expect a drilling frenzy just yet. Will Drill Baby Drill deliver long term? Time will only tell, but for now, I want you guys to enjoy those cheaper fill-ups. But more importantly, what do you guys think? Are you feeling the savings at the pump, or are you skeptical about where this is headed? Drop your thoughts in the comment section and let's keep this conversation going. Hit that like button, like the video if you like the video, subscribe. And as always, I'll catch you guys on the next one.